Hey, everybody, welcome to the kickoff session of our Option Masters education series. Now, for those of you that may have audio only or can't see it, this session will be recorded and will be posted, and I'll show you where you're going to be able to find it on the website. And then hopefully, all of these technical glitches, for those few of you that are having some issues, we'll be able to work them out by the next session, okay, for the next one. Tonight, I got a lot of questions on what we're going to be doing and how we're going to be doing it and everything. So I thought tonight you can put your pencils down, your paper down, and then just kind of listen to what we're going to do. Because this kickoff session is going to be more about what is the Option Masters Education Series? Where are we going with it? What are we going to do with it? It's going to be different than what other webinar systems you may have attended, whether it's with me or anybody else, because we're going to cover a whole lot of things. And your participation is going to be dynamic. By that, I mean, probably through the first 3 or 4 sessions, I'll send out a short survey, or you can just send me an email. And what I'm going to look for from you guys is what additional things you want to cover. And I will be doing this throughout the entire series. This series is not going to be 3 or 4 1 or 2 hour sessions and that's it. We're going to be running this through probably February of next year. All right. Every Thursday night, with the exception of Thanksgiving holiday here in the United States. We got a lot of people on in the Asian markets, European markets, and some Latin American markets. So some of you may or may not observe some holidays. Certainly, Thanksgiving is a U.S. centric holiday. That will be a Thursday session, which obviously we will not have. And then there will be a 2 Thursdays in a row for the Christmas week and then the New Year's week, where Trader User Group is going to take a 2 week break and recalibrate so that we can get the next year going. But outside of those 3 weeks, we're going to be running every week until we complete the entire Masters series. Now, I say February, but it may go till March. So there's going to be 30 to 40 hours of education in this series. And what I'm going to do tonight is just give you a preview of some of the things we're going to talk about. Now, what I want you to do in return is to take a look at what I'm going to be talking about here and then send me an email that hey, Brent, you knucklehead, you forgot to include this, or you didn't do this, or can you expand on this part right here, or I'm really interested in this part of it. Tell me more about X, Y, or Z. Okay, so that part is going to be very important because I want every single one of you to come away from the Master Series a lot smarter than you were going in. And we've got folks in our room that are obviously beginners, and we got some intermediate and we got some advanced folks. So I will always tell you in the series where we are and what the next session is going to be. That way you can say, well, the next session he's going to go into detail on option Greek starting with delta, and I feel really comfortable about that, so I'm just going to skip it. Okay, and then you can pick it back up, just because every meeting invite that you're going to get, and we'll get all these little nuances worked out on this first session. It always happens whenever I do a session and we get a lot of folks that come in, especially folks that are non-Trader User Group members. We get some issues with technical glitches and things like that. So with a big series like that, that's why I chose this kickoff session here to talk about what we're going to be talking about in detail. But I do want your participation, and some of you out there, and I find whether you're advanced or beginner, you can put some good insight in there to make sure that I cover this stuff. Okay, so we're all going to learn on this thing. And I also learn because I get in there and I bring out some of the things that I haven't looked at in a while on specific strategies that it may not fit my style, but I want to learn the strategy or understand it and refresh my my memory of when I use the strategy a lot. Okay, so that is a little bit about where we're going with this Masters series. You guys got this is, you're going to find that at the end of it, you're going to go, wow, that was definitely worth the time in the entire process. Even if you pick up 1 or 2 things, let's say you're an advanced level intermediate or an advanced options trader, you're going to find one or two things in here you didn't know before, and you're going to learn them, and that may make you, an extra 5, 10, 15, 20 grand a year in money. So these are just some things that, have kind of floated through my mind as I thought about how I want to kick this thing off. I didn't want to just jump in right away. Okay. Now, from an admin standpoint, before we jump into everything, every session starts off this way. Trading securities can involve high risk, the loss of any potential funds invested. Any investment information provided by our user group may not be appropriate for all investors and is provided without respect to any investor financial sophistication, situation, time horizon, or risk tolerance. Therefore, any of the information techniques that we talk about in our groups tended to be for educational purposes only, not intended to be a recommendation to buy or sell any specific security, no matter what your rat brain is going to want you to do. So, Rich, I hope I did that the right way. He's one of our resident lawyers out there. We got a few. And that way it keeps me, going like this. So anyway, let's jump into the master series here. Okay. Now, for me, when I got into trading about 25 years ago, almost 30 years ago, I remember I did my first trade. It didn't count. I was only 6 years old. The commission was $300, by the way, and I bought stock. I remember my father teaching me how to read the business paper and the stock section in the back of the paper. I was 6, and that was my first trade. $300 commission, and then of course you don't know what the stock did unless you happen to call the broker or you waited till the paper came out the next day to see if you went up or down. My, how times have changed. But most average investors, and I don't mean you guys, because you guys are generally much more sophisticated than the average investor out there, what I call the average rat brain trader. And these guys pretty much are linear in their thinking. In other words, they buy long. That's all they do. They buy stock, they go long. And they feel if they lose money, they just pick the wrong stock. And really, as you start to advance in trading, you're going to learn that it's not so much about getting into the position, but it's how you manage the position and how you close the position. Your trade management techniques and your position sizing is where you're going to make the money or not. Okay, now if you happen to pick a stock that goes in the direction you want, that's great. But then you maximize that with proper position sizing, and trade management techniques. So for me, financial freedom is basically having the ability to get into the markets and trade where I want, when I want, and whatever I want, right? And that is kind of what we all strive for. So my hope here in all of this is to provide enough knowledge and foundation for you guys to do the same thing, right? It doesn't happen overnight, but that's kind of what my hope is here, and it does require feedback. Okay, so during all of these sessions, if you have questions, feel free to put them in the question box as we go through. Now, on this, when are we going to hold our sessions? Well, every session is going to be Thursday at 8 p.m. except for holidays, as I said. And how long will the series run? Well, we're going to run it until we finish it. I'm estimating through February 2018. So it's going to be, but it could run into March or April, just depending on how long we spend on specific strategies, because there are some strategies out there that we can spend quite some time on. All right. I mean, literally 4 hours on. Okay. So it's just going to run until we're finished, and that's it. Will every session be recorded? Well, yeah, every session, of course, is going to be recorded. It will be available for your viewing the next business day. Now, the one thing that we're going to do that's different in this master series, which I think is going to help you guys out a little bit more, is we're going to break down every session into smaller sessions on the video recording. So rather than just putting one recorded session in our video library, so you click on it, right, and then now you've got an hour and a half or 2 hours of video to go through, we're going to segment it and break it out. So an example would be, let's say we're talking about option Greeks. I may segment that into 4 components, the delta, gamma, theta, and vega. So then when you go to review this, there may be 4 components to a 4 hour session. So let's say we spend 1 hour on delta, and then we spend an hour on gamma and theta, and then we spend 2 hours on vega, or maybe 3 hours on vega. So what you'll see are these sessions broken into sound bites. So when you go out there, you can say, I think I got delta down, but I don't really understand gamma very much. I'm also going to introduce to you guys a little bit in the area of higher order Greeks, although we're going to stay very basic on these higher order Greeks. For now, anyway. All right. So we're going to kind of cover those as well. We're going to talk about all the and a lot of you guys that have been with me for years, there's going to be a lot of new stuff out here as well. All right. So by forcing yourself to go through this entire series with me, what I'm essentially doing is redoing every video in my video library, but we're going to be adding, refreshing, updating, putting new stuff in, right? And then you guys are going to give me feedback on, hey, we like this, but what about X, Y, and Z? Because sometimes, in my mind, I've got it solved. I know what I'm talking about, but it may not be that clear to you. All right. So that is going to be another component that we're going to be looking at here. So that is going to be cool. Unlimited viewing from any device. Okay. So that's just a given. You'll be able to take a look at any device and just go through it. Course additions and further study. Well, what that basically means is what I just said earlier. Please send me emails on what you don't see included or what you would like to review. All right, that's not on here. Okay. Surveys throughout. So what I'm going to probably do is about 5 or 6 sessions in, 5 or 6 Thursdays in. So it'll probably be December, early January. I'm going to send you a survey, and I'm going to say, okay, what do you like so far? What else would you like to see? Are we tracking? Because I've done both seminars, I've done presentations at universities on college campuses without getting kicked off. And I've done webinars. The beauty about doing an on-site, you've got immediate feedback because you got folks sitting right out there and they just ask you questions. And then when you take a break, you can't go grab anything because they're going to come right up to you and just take you and say, what about this? Or you talked about that. Because you got some folks that don't want to ask questions until they're alone because they think the questions are basic questions. Don't ever be embarrassed about basic questions. I can tell you this. Some of you guys already know the story. When I first started trading and one of the instructors was talking about the bid-ask spread, I thought he said a big ass spread. And I just thought, man, he's right. There is a big ass spread on this trade here. And so for 2 or 3 weeks, I kept thinking it was a big ass spread. But then when I got into a trade that had a really tight spread, I'm going, this isn't a big ass spread. He goes, no, you dumb idiot. I'm talking about bid-ask spread. So guys, trust me, I'm a former Marine. Ask any question you want. Trust me, it's not going to be silly because you're dealing with money, right? So I don't have any problem with any of that stuff. So we're going to be doing this feedback here, and I find on the webinars, because it's going to be such a long series, feedback is going to be crucial. And then at the end, I've got a little bit of a surprise for you guys. And I will tell you about that later. All right. But there'll be a surprise towards the end of the series. Right. So just stay tuned for that one. That one's going to be coming up at the end of the entire master series. So, before I do anything else, I'm going to freeze my screen for 1 second here. So everything is going to kick off for a sec. I'm going to go to my website. Let me get it over here real quick. Well, that would help if I had had it on here to begin with, wouldn't it? All right, so let me get the website up because I shut it down. See, how's that for prep, Shirley? By the way, Shirley's one of our Olympic weightlifters. You've got a meet tomorrow, right? Shirley could kick my ass in the gym, by the way. Jason, she'd love to go out and work out with you. Jason's another former Marine, Shirley. Really great guy. Shirley, Jason, I bet you she could kick your butt in the gym. Oh my goodness. All right, so I know she could kick mine. All right, hang on a minute here. I'm trying to get the website up right now. So let's see here. Here we go. Let me get this right like this. It's coming up. It just takes a long time, I guess, here to come back up here. What I'm going to show you on my website is where to access these videos, okay? And where to go on the video to access them, where to find them. It's going to be self-explanatory when you see it, but I just want you to see it anyway, okay? So I'm just trying to log in here. I actually shut down my browser before I started this session so it wouldn't interfere with the session, but stupid me, I needed it. All right, so let's get I'm going to log in here and then I'm going to get over to you guys. Okay, so screen's coming up for you again. So once you've logged in, you guys should see my screen right now, right? All right, so once you've logged in on this system, it'll have your name right here, right? And you'll have your subscribed services right here of what you've got, right? Now, if you're not a TUG member and all you're doing is you're just attending the Option Master series, and that's what it's going to show. So what you're going to want to do is just go to the home button right here. So I'm just going to come over here. Let me turn it would help if I turned off my pen here. And let's just get so I can click on it and my clicker will work. So you're just going to go to the home button right here. And then once you go to the home button, you can see here the main screen here. You're going to click on the Learning Center in the center, okay? That's where you're going to click. So by clicking on the Learning Center, it's going to take you to 4 buttons on here. For members, you're familiar with our weekly market watch and our pre-market trader. These are the sessions we do every Tuesday and Thursday, and then Sunday night, the weekly market watch. Over in trading strategies, that's where you're going to go, okay? And in trading strategies, tonight's session is going to be posted up here where it's got helpful trading tips, all right? It'll be kind of an overview of the Option Masters itself. Now, down below, you're going to see right here, foundational education. And you can see here, you got option basics, you got trading volatility, vertical spreads, diagonal spreads, condors, butterflies, futures, commodities, position management. And by putting your cursor on any one of these, you'll see how many education videos are there, approximately how many hours are there. And by clicking on any one of these, so like if I click on this one right here, right, it'll take me to the volatility. And then I can come in here and as a refresher, I can come in here and over on the right hand side as I scroll up and down, I can click on these. I can put my mouse over and it gives me a little pop-up of what it is. And I can click on it and then click on here and watch the video, okay? So these are the foundational series. We're going to be covering a lot of foundational in these these option masters, but we're going to take it a step further. The option masters is going to be down here. So like up here, it's going to be down here. And then once you do a mouse over, you'll be able to come on and find what you need, and you'll be able to go through the video very quickly. All right, so it's pretty self-explanatory, but that's how you're going to access this. All right, so I wanted to just show you that so that you can get an idea of how to access all of these videos. Okay, so let me just take it back to the presentation here, and let's just come back to the slide here like this. And then let's just come back on here. So that to me is very important, because there are a lot of you, I mean a lot of you, that are resource constrained, right? I mean, you can't, okay, so video, the screen is coming up right now. Here we go. So a lot of you are resource constrained or time zone constrained. You can't see it because, you may be in Europe and it's, 2 o'clock in the morning and you got to go to work, or you may be in Japan, where it's 9 o'clock in the morning, 9:30 in the morning, to Friday morning, and you're at work, or Singapore or Australia or something like that. So that's why all these are recorded. And I want to make sure that you can access those. So these are some of the basics of Option Masters. Remember, send me emails after this session, because I want to show you what we're going to be covering. So my philosophy in trading is really very simple. I have found that when you keep things simple, it's so much easier to manage. It's so much easier to control. And in my years of coaching, it's actually made me a better trader, because I've coached hundreds and hundreds of people. And after a while, you see pretty much the same mistakes that everybody makes, me included, when you first start trading. Trading is one of these kind of things that everybody, I mean, everybody, generally that gets into it is successful, smart, has a little bit of an ego. They may have had their own business. You may have made a lot of money, or you're starting off young, but you're a pretty smart person. And you get into the markets and you apply what's worked in your business, and all of a sudden everything just starts going wrong. You can't figure it out. You don't know why. And we're going to cover that in this master series. My philosophy is there are 3 things that you've got to get right to be a very good trader. The number one thing is risk management, bar none. Now, risk management is one of those things that tends to come later in everybody's budding trading career, or however you make it. Some of you will trade part-time. Some of you will love it so much and you'll be good at it, you'll start trading full-time, okay? But you will eventually come to the conclusion that risk management is where it's at. Now, rat brain traders generally follow their business journal of the day, which is the National Enquirer or the Color by Numbers USA Today. And they're always late to the game. Always, always, always. And we always have rat brain tendencies, all right? I will spend more time when I get into the actual risk management section telling you what that means, all right? Now, risk management is the most important thing. So we're going to spend probably 1 or 2 sessions, probably more than 2 hours, maybe around 4 hours, just on risk management, all right? And we're going to talk about your risk tolerance, how to determine that. We're going to talk about portfolio allocation. All of my risk management strategies, they used to be rather simplistic when I first started. I mean, I'm like, oh yeah, risk management, yeah, just set a stop loss and I'm good to go. But I was very myopic. Most traders, when you start, I don't care if you're stock only or you're options only or futures or a combination of all of the above. Even if you just invest in bonds, most people think of risk management as I'm going to put a stop loss out there. Why? Because you're thinking linearly, you're thinking long only, and that's it. That's your view of risk management. And you're very myopic in that each individual trade, you have risk for that trade. But now, if I were to go in as your coach and add up all your trades and look, I would say, and I've done this many times with folks that I've coached, where they may have come to me, um, with a lot of um, let's say trades. They had like 50 or 60 stocks on, something like that. And um, to me, I see that and I look at all 50 stocks, and 40 of them are in the energy sector. Or they're in the technology sector, or they're in one sector or another. So their allocation is all messed up. So we're going to go into some simple ways to just make sure your allocation is set. Okay. Volatility based. Position sizing. Position sizing is one of the biggest things within risk management that can make or break you. Position sizing says, should this be a small trade or a big trade? Did you know that in the World Series of Poker, the number one poker players that always win, they lose about 60% of their hands? Do you guys know that? 65% of their hands? They only win 30%, maybe 35% if they're real good. And yet they win. Why? Because they know which hands to play. They know which hands to bet on big and which hands to not play very big, and when to just simply fold and walk away. Trading the markets is the same way. Very similar, the same way. Okay. Now, the second thing, once you've got risk management down, and by the way, risk management is um, uh, the number one thing you will note, and I know I get this all the time. I very rarely do I get an email, and I know you guys get all the emails too, trying to sell you on this fad or that fad or some of these other things, right? Trying to hit you on all these things. Very rarely do you get an email trying to sell you on risk management. You'll get the email that says this butterfly trade did 200% last quarter, and we're going to do 200% this quarter. Don't miss out. Or this unbalanced fly, or this option synthetic unique way of trading did this and did that. And what the email is playing off on is your rat brain tendency to the fear of missing out. FOMO, FOMO. Remember that word. It's been scientifically proven that you feel more pain when you're not in a trade that's bullish that you want to get in than you feel in a trade that's losing money. And it's actually your money you're losing. You feel more pain on the fear of missing out. That's FOMO. So the thing that we focus on here is risk management up front. That's why we're going to kick off the entire series on this. Now, I will tell you, in risk management, there will be some math. I will keep it very basic, okay? But I will use some math to kind of explain some of this stuff. Bias determination, that's the second thing. Bias determination essentially tells you, okay, so now you've got your risk management down. You formed it, you've got it. It's like your financial plan for the year. You know, you've got your projected income coming in, you've got your projected expenses, you've got your budget to your expenses, and you use your budget and your projections to measure where you are to actual to see what you need to do to adjust or change or modify as you move throughout the year. Risk management is the same thing. As your portfolio grows, as you start to do your allocations, as you start to look at the markets and where they're going and where you want to over allocate, under allocate, all of these things, right? That's great. You've got that there. Now you've got to say, let's say you say, I'm going to be in the energy market and I want to allocate to the oil futures. So what is your trade here? What is your bias on the trade? And a bias means what's your direction? Stock traders only. 95% of them don't short stocks. You guys know that? Most stock traders, they just buy stock. They may sell a call against it if the stock is sideways, but even that is advanced for a lot of stock traders that are actively managed. They'll just buy stock and they'll collect dividends, and that's about all they know. So they're long only. But I'm going to teach you In bias determination, how do you do it? What's included? Well, obviously with a bias, it starts with a chart. And I'm going to go through a couple of different charts, like the primary chart, and then maybe a few others out there, and then I will go into how to use that chart to determine your bias. We'll look at key indicators on the chart, right? Momentum indicators, breadth indicators, stochastics indicators, and sometimes people make the mistake of using different indicators, but they're measuring the same thing, like breadth. So you're just getting at the same thing on four different calculations. It does you no good. So you want to set up your chart so that you're including a couple of different kinds of indicators. No one indicator you will find, as for those of you that go with me on my Tuesday and Thursday and Sunday night sessions, part of it is training anyway on charts, and you get a good idea of how I use charts. And you already know, especially those who've been with me for a while, know that we're pretty darn good at looking at where the market is and where it's going. Okay, so we're going to be covering charting, key indicators, key pivot points, patterns on the chart, and then of course additional nonsense. And by that I mean there are more indicators and more ways of looking at a chart as there are at looking at art on a wall. You go to any museum and look at art, and you ask 100 people, do you like that painting? And you will get everything from it's the best thing they've ever seen to that's a piece of garbage. It's the same thing with charting. What I don't want to do on this Option Masters is teach you my way, the Brent way. I want to teach you the fundamentals, and then we're going to go into advanced so that you can then apply this in your own style. Okay. The advantage when I'm doing coaching is that I learn more about your style, and then we can pick and choose and then leverage your own personal style, your own risk tolerance levels, and that kind of thing. How much time do you have to trade? What time frame do you want to trade? Do you want to stay in equities? Do you want to jump in futures? What's your portfolio size? What are your risk objectives? All of those things are personalized. In this series though, we'll go through the math so you can in your mind go, well, let's see, if I've got 25,000 to trade, how am I going to allocate that across this? Here are some examples to do. Or if I've got 1 million. And better yet, one of the things we're going to do in this series that you won't find in hardly any other series without paying thousands of dollars is, how do I trade a portfolio margin account versus a non-portfolio margin account? In Interactive Brokers, you need $100,000 to get portfolio margin. In Thinkorswim or TD Ameritrade, you need 125,000. And keep in mind, portfolio margin is relatively new. It only came across, I don't know, 5-8 years ago. Before then, they didn't have portfolio margin. It was only open to traders on the floor. They're the only ones that could do it. Now they've opened it up. Okay, so it's a relatively new thing. So that's a little bit about bias determination. And then finally, strategy execution. So these three things we're going to focus on for the next 4 months. Risk management, bias determination. So risk management, you know what you're willing to risk on every trade. You know where your allocation is. You may say, hey, I want to get into this trade, but it means I'm going to be over allocating in this sector. Let me look and see what I'm already in. Do I have profits? Do I want to peel any off? Do I not want to take the trade? Am I willing to go outside my risk parameters? And if so, why? And if I do it, what is my risk criteria on that specific trade? This is how my mind works all the time. This is how your mind will work after the Option Master series, okay? I don't care if you only have $5,000. Now, in the Option Masters, for those of you that are in my Secret Trader, I have set up a portfolio of $6,000 in TOS. I think 6,500 in TOS. I'm going to do a $25,000 portfolio in TOS, and I'll probably have a $70,000 portfolio in TOS, real money, because those of you know in Secret Trader, we're trading real money. I'm not just paper trading and asking you guys to blindly follow me. I trade real money. And then for you guys, you can follow me for educational purposes only, of course, but I'm trading in real money. So the beauty of it that is, if I'm trading a $6,000 portfolio for those of you that are just starting out, or just want to kind of kick the tires, you can see what we're doing and how we're doing it, or 25 or 75. I'll also have a portfolio that's a portfolio margin account. You'll see when I post trades in the Secret Trader, if you want to join up in the Secret Trader, I'll put in there it's a PM account only. All right. And you'll see what we're doing in those things. So strategy execution is just what it means. You've got your risk management down, you understand it, then once you've selected a trade, you've got to determine the bias. Am I bullish? Am I strongly bullish? Am I neutral? Right? That's a bias. The stock is going to be range bound, or I'm bearish, or I'm wildly bearish. Every one of those things, including volatility, go into, especially volatility when you're trading options, goes into the mix of selecting your strategy off the strategy shelf. Okay? All of those things are extremely important, very important. Now, let's take a look at the foundational knowledge. This is what we're going to cover foundational wise. Before I get in some of the advanced options, I know some of you can handle it right out of the bat, but we're going to be building up to it. Okay, so in the foundational knowledge, you need to understand this first before we get into some of the more advanced stuff. So I'm going to be talking about foundational knowledge. And there'll be a number of sessions on foundational stuff like option basics, option Greeks, reading P&L graphs, using TOS, how to use TOS to do all this stuff. Now, I'm using Thinkorswim as the platform of choice. I know a number of you may have Interactive Brokers. The platform sucks, but you can trade just about any asset class, so that's really good. I found that most people that I coach that use Interactive Brokers also has another product that they use to track the analytics of the trade. I'll talk about that, and I'll get you guys a discount on it if you want it. If not, that's okay. It's whatever suits your fancy. But I'm going to be using Thinkorswim as the main platform of choice. So we'll get into the foundational, we'll get into advanced option strategies, and we're going to cover advanced option strategies not only in equities but also in futures. So these are some of the areas that I'm going to be covering here. So foundational knowledge, what I'm going to be talking about. Well, we're going to go, I should have put risk management first because that's going to be the first thing we talk about next Thursday, risk management. And it may take 2 sessions. You're going to have your pen, paper, and your eraser because we're going to get some math and risk management. But then after that, we're going to get into charting. A little bit of option basics is probably where we may start in the foundational knowledge. There'll be a big section on charting. Greeks, we're going to look at the Greeks, the basics of Greeks. We'll go into some of the basics of higher order Greeks. I'll talk about that in a minute. Portfolio allocations, we're going to cover both Reg T and PM portfolio margin accounts. And how that works in Thinkorswim. For those of you that just got portfolio margin, I'll show you some of the differences once you have portfolio margin. They turn some additional enhancements on for you in Thinkorswim that they don't if you don't have PM. Okay. Helpful trading tips. So as we go along, there'll be some helpful trading tips that I'll point out to you guys. Option strategy basics. So now here's another area where Option Masters is going to veer off from a lot of other trading courses, right? What it's going to do is it's going to talk about basically here is a calendar. Here's the structure of a calendar. Here is a butterfly. Here's an iron condor. Here's a strangle. Here's a straddle. Here's a short calendar. Here's a long calendar. Here is broken wings. Here are skip strike calendars or condors or any other kind of strategy that you can imagine. So those are strategy basics. You can even read them in a book, but it's always nice to go through them here, and I'll show you how to set them up very easily in Thinkorswim. And then how to look at your margin on that. And every strategy that we talk about, I'm always going to have risk management in mind, so I'll talk about the risk associated with that strategy, okay? Now, in addition to that, once we get through the strategy basics, right? And as single leg calls and puts, vertical debit, credit spreads, wing strategies, flies, iron condors, balanced and unbalanced, broken, skip strikes, all of these in the wing strategies. For those of you that have followed me for a while will probably know that I love flies. It's one of the most versatile trades that you can do. All right. We'll look at calendars, also very vertical, very vertical, very strong if you know how to use them. Ratio spreads, back spreads, again, very powerful. If you understand volatility, these things are just extremely powerful, not only in the equity world, but also in the futures world. And I will show you asset classes, different asset stocks that tend to work better for wing strategies than others. In our oils trade that you guys have been, a lot of you guys that are not Tug members, but a number of you here tonight are Tug members in our secret trader have followed me in oil. And as you guys know, what are we now, Hot Rod? We're 21 for 21, right? 21 trades, 21 successful trades. And now we've got some more on in Jan and Feb futures with our flies, right? And also strangles. So and for those of you that are not in Secret Trader, if you're interested, then you can go out our website and sign up for it. But you're going to learn a lot in how these things work. I mean, it's just, to me, it's like taking a nice, thick, juicy plum off the tree and just taking a bite of it, right? No, this isn't Adam and Eve crap. But that's kind of what it feels like. Take a bite of an apple. All right, so this is foundational knowledge here. Diagonals. Diagonals is another one you guys know I love, right? But I do it a little bit different. I'll do ratio diagonals. We'll ratio the thing and how it works. This is all foundational. So when I go into this, it's stuff that you could read in a book, but I'm going to bring it alive to you. But then we're going to take it to another level, all right? Straddles and strangles. Then we're going to get into the advanced side. Once you've got the foundational down, we're going to get into the volatility a lot deeper. We're going to get into the strategy trade details. So not only are we going to just say, okay, here's how you set up a calendar, right? But we're going to go, what happens if it starts moving against you? What happens if volatility starts moving in the direction you think, but your calendar isn't working the way the book says it should be working? What's wrong? And I can tell you 9 times out of 10, that's what happens with calendars. You put a calendar on before earnings, bam, you get the earnings, volatility gets cut in half. You're like, well, gee, shouldn't this work? And you're underwater and you're like, I don't get it. What happened here, right? So these are some things that I think you're going to really enjoy. So we're going to go into, after you understand the basics of this, we're going to circle back to each strategy again. And we're going to dig into it a little bit deeper. In fact, what we may do is stay with each strategy and go through this process. Then we're going to get into the futures. All right, I've got a whole foundational sessions that you guys can go in and review right now if you want. As I showed you on futures, there's about 8 to 10 hours of futures out there. But we're going to take it a step further, and I'm going to show you ways to manage your risk while trading your futures. And I'm going to show you which futures you can trade based on your portfolio size, based on the time frame that you want to trade. You may have a portfolio size of $50,000 going, hey, that's great, I can trade any of this stuff. Well, not on certain time frames, right? There are futures that you can't trade on a daily basis or a 2-hour basis with $50,000. But there are other futures that you can, on $50,000, trade a 2-hour time frame. I will show you how to make those determinations. Very, very important. Futures pair trades, seasonality trades. We're going to get into these a little bit, like the crack spread, like what happened when we had Hurricane Harvey come roaring through Northeast Texas and shut down the refineries, right? I mean, it was horrible. I mean, I got family in Texas, right? Not in that area, but I know people there, and they got really hurt. But being traders, It's like, you've got your political persuasion, I got mine, but whoever's in office, all we want to do is trade the markets based on the environment we're given, right? It's kind of like playing the hand you're dealt. So we traded these, or I was recommending some crack spread trades with gas and oil. And for those that did take it, it went really well. We now have a trade on in gasoline that's looking really well for those in our secret trader, right? And we've shifted our stance to oil about 2 months, about, I don't know, maybe what was it, Hot Rod, about 5 weeks ago, we shifted our stance in oil. But these are trades that I think you guys are going to fully enjoy as we go into some of the strategies on these things. Gamma scalping. I put that out there in our chat room just so you guys could follow me in a live trade on gamma scalping. And some of you saw, that's a lot of work. Gamma scalping is for those folks out there that like to drink Red Bull and like to trade a lot during the day. Me personally, my own personal style, I like to do a couple of adjustments a day, one trade here, one trade there, and then I can sit back and watch the markets. And assuming they stay in a certain range bound mode, I can just sit back and have a beer and, have fun. But some of you out there, if you're not doing a trade in a day, you feel like you're missing out on something. And gamma scalping is built for you. All right. So we'll go through some gamma scalping and I'll go in more detail because I know when I did it in our chat room for our members, many of you didn't take it, but at least you saw real time what it was, how I did it, and how you use stock to control either your delta or your, which is really your gamma, or your theta. Synthetic option strategies. There are ways to make a call a put and make a put a call. You shift them around, okay? We will get into synthetic strategies when we get into trade adjustments in the advanced option strategies on, maybe ratio diagonals or into butterflies or vertical spreads that we convert into flies, things like that. So these are just some additional things that I think you guys are going to really enjoy as we get into, okay? Portfolio hedging, again, under risk management, but I will show you the biggest mistake I see beginner traders make as they go into intermediate, because when they first start trading, right, it's like drinking from a fire hose because you're trying to figure out directional bias. Yeah, I'm bullish on this chart. It makes sense. Everybody's in agreement I'm bullish. I'm going to take this trade strategy and I'm going to do it. And you're so focused on learning the trade strategy, whether it's a butterfly or it's a unbalanced iron condor, or it's a simple vertical spread, bull call spread, or whatever. You're so focused on that you forget that you have other trades on, and those other trades, when added up, complete your portfolio. And before you know it, you become unbalanced in your portfolio. Okay, that's the biggest mistake I see intermediate traders, newbie intermediate, where they've got the strategies down, they understand the Greeks fairly well. They still have a few things to learn, but they're pretty good, right? Portfolio hedging is the next step because you've got to understand the portfolio allocation and then you'll get into the portfolio hedging. Now, in portfolio hedging under advanced option strategies, if you have a portfolio margin account, it's easy to do. For those of you that have PM accounts, it's easy to do. And we got folks on here that have 7-figure accounts, right? We got folks on here that have 8-figure accounts, believe it or not. So you need to understand how to hedge your portfolio. I call it my FUBAR hedge. And for those of you in the military, you know what that means. F up beyond all recognition. Jason, you know that, right? It's a military Marine Corps term. We just call it, man, this thing just went FUBAR really quick. I love it. And you know what I'm talking about. And I've just seen things go FUBAR real quick. So we have what we call the FUBAR hedge. Now, as a FUBAR hedge, it's done completely different if you have you don't have a portfolio margin account, right? If you don't have a portfolio margin account, then you can't do the PM FUBAR hedge. We have a FUBAR hedge you can use the spiders for. I will go into it and I will show you how it works. I will even show you in the Greeks where it shows you are short volatility on a trade, and when vol goes up, you make money. And you would be like scratching your head going, okay, I don't get it. I don't understand. It says here I'm short 500 Vega, and yet volatility went up. And I thought if you're short anything and something goes up, you should be losing money. Well, yeah, you should. But Thinkorswim, as does all other platforms, don't calculate weighted Vega. They don't do that. The Black-Scholes model, when we get into option pricing, only makes an assumption that volatility is constant up and down the supply chain of option strikes, right? So we're going to get into how do you account for some of these nuances here, things that it's more intermediate that you need to understand, right? You just need to understand how that works. So portfolio hedging. All of our option strategies, again, what Option Masters is going to do is we're going to take it a step further than just defining an iron condor and then just putting an iron condor on. You know, what are the strikes? What are the deltas? What is the basic parameters of it? How do you take your profits? You know, those kind of things. What we're going to do is we're going to take it a step further. We're going to look at the key trade parameters of every strategy we look at. What's the trade goal for this specific strategy? What's the objective? What's the macro versus micro? In other words, let's take a look at the market environment on the stock or asset that we trade, or SPX, even if you're trading the index, right? What's the macro environment? Where's the volatility? What's the big risk in the trade, right? What's the time and duration of the trade? What is the strike or strikes selection that we're going to be doing? One of the trades that I did, and I'm not going to pick on one of the folks that's on the session tonight because it was a fair question he was asking, right? A very fair question. You will see me in a trade add multiple strategies to one trade. I may have a core strategy on. The macro says this asset between now and 12 months from now is going to be higher than it is now by the tune of, let's say, 8 to 15%. It's going to be a higher. You know, it could be a commodity, just pick something. It's going to be a more expensive. So I'm going to put on a macro strategy. But then around that macro strategy, I'm going to be doing some micro strategy. So I'm going to be trading and dancing around it, kind of like dancing with the devil. All right. So you may see a trade where we are long, but then all of a sudden the price action starts to, after a strong run up, consolidate and move back a little bit. And you may see me leave my macro strategy on and then come in with a micro strategy that is neutral to bearish, overlaid a bullish strategy, right? And again, what I'm trying to do is extract a little bit more out of the trade. All right, and I'll go into some of that, and it's a little bit of what some of these people will do in what they call, you may have heard the term alpha. In fact, I know you've heard the term because I've got the Alpha Trade series that I post in the chat room, right? It's a little bit extra, a little bit of extra oomph that we're trying to get out of the market. So sometimes my madness may not make sense to you, and that's cool. That's the beauty about trading, because it's like, I think, Alex, you put it very well. It's like art, right? I mean, you know, every artist has their own style. Some like paint, some like charcoal, some like pen and ink. And even if you have the same favorite, you both like paint, one's going to paint a landscape, the other's going to paint animals, the other's going to paint portraits. The beauty of trading is, what I want to achieve with you guys at the end of this Option Masters is the foundational knowledge to an intermediate level that will then allow you to evaluate better other trading styles and methods and say, nope, it doesn't work. Because you'll get to the point where I like it when some of my members, I'll put a trade out there and a member will say, okay, I see what you're doing, Brent, but I'm not going to do it because of this, because I need this and I need that. And I'm going, cool, that's great. That is what I look for, because now you are not necessarily challenging what I believe. You're just saying, I see what you believe in your trade and I see the strategy you've selected, but I'm going to choose this strategy over here because I believe this, right? Even though we're both bullish. And your reasoning is sound. just as sound as my reasoning. And when we get to that level, when you guys get to that level, I love it because now you're starting to think for yourself. The one thing I don't want you to do is have to rely on somebody else. What really drives me crazy, and I got friends that do this. I've been in this industry for a long time. I've got hedge fund buddies over in Europe. I've got friends here that have been in trading. I lived in Chicago when Thinkorswim started. I got to know Sosnoff, a few of these other guys have been around for a while. Everybody's got their own style, right? And you've got to develop your own style. So hopefully that's what I can help you guys do, right? I hope you develop your own style. I'm not here to say you've got to follow this one way. So you'll find that this works well here. Other things, keep the volatility structure for the trade, the vertical skew, the horizontal skew. Again, it depends on the strategy, right? I may have a macro strategy that I stay in a vertical skew 6 months out, but then I may introduce a term structure or a horizontal skew strategy on top of that strategy, and now the dynamics of my trade completely change. And does it suit what I'm trying to do, right? I mean, does it fit what I'm trying to do? So we're going to be covering that for all these strategies. Excuse me, trade strategy setup. We're going to be looking at the setup of the trades. Trade management. We're going to go through. I've got a product called One that I use on the side, and I will go through and we will back test One. I will show you guys in the back test how you can become a better trader. You know, one of the things that you may not understand or believe, I am always back testing stuff, right? I've been doing this for a long time and I still back test stuff. So what does that tell you you should be doing, right? If you really want to have a life where you can work an hour a day or not work at all and go wherever you want to go, whenever you want to go, and the market is your master. Someone, I think, who'd say it? Gordon Gekko in one of the movies said, money is a bitch that never sleeps. And that's true. But I want you to get to a point where you've got the money where you can choose the lifestyle you want. You can choose where you live and you can choose who you want to associate with. And if I can get to that point with you guys, then you can just, you know, if you want to work for someone else, that's great. But at the end of the day, I know every one of you here on this session wants to work for yourself, right? And whether you want to work an hour a day or 5 hours a day or just take the week off and play with your kids or significant other, that's great. So trade management, we're covering that stuff. The risk, the profit taking, the adjustments. So that is a little bit about what we're going to cover, gosh, all the way through February and March. That is a lot of stuff. I mean, it took me over an hour just to go through everything we're going to cover. So you guys, this is going to be a lot of fun for me. I hope you can tell I really enjoy doing this because I wish there was someone like me around when I first started. I blew through a six-figure account very quickly. And then because I'm a Marine, Jason, I didn't give up. I had to do it again. I changed my method, but I still blew through another six-figure account. So I've blown through two six-figure accounts many years ago. Now, this is when I had a business on Wall Street, and then I started working with some buy-side and sell-side firms, and then I found this old dude, gray hair, had been around for a while, and I said, let me just kind of saddle up and start talking to him. All right. And then I figured the old guys that have been around for a while, those are the guys you want to talk to. And every single one of them said, dude, it's about risk. You got to manage your money. You have no inventory, you can't play the game, right? If you have no gas for your car, you can't compete in the race. So, yeah, it's a big ass spread, my man. So, you've got, and so what I'm trying to do is at least the best I can of my ability to just kind of give you guys the information you need. Now, what you can do is send me emails because I promise you I will get emails from many of you that say, well, can you cover this and can you cover that? And some of the stuff that you send me, probably another half a dozen of you will want to do the same thing, but you won't send me the email. Now, I will collect all the emails and just bunch them up into like-minded stuff, right? So, and if you, I don't even have to mention your name. because some of you are more shy than others, which is cool. Me, I had a big mouth. So Jason, that's just from being a Marine, right? You just it's kind of like saying, "Hey, have a schoolboy circle." The in drill instructor school, they'd say schoolboy circle. We'd all circle around. He'd get in the middle, and then he'd start talking. If he ever saw you close your eyes, you were dog meat. All right, so what you guys are looking at on the screen here is just as an example. We're going to get into more detail on this in risk management, but this is the probability of seeing consecutive losing trades within a 50 trade period. This is a Monte Carlo simulation. I love this chart because it really shows you the power of what can happen, and this is where trading gets difficult. The hardest part of trading is going to be between your ears. The easiest part that I have found in coaching is teaching someone the science of trading, the science of a trade. You know, here are the strikes, here's the deltas, here's an adjustment point. That's the science. The hard part is showing you how to put that brush stroke on the canvas when you put the paint on there to make it look real instead of just looking like it was just done by a, well, you get the idea, right? So anyway, looking at this, you can see if you did 50 trades, right? And here's your win percentage. I will tell you that most directional traders very rarely get up into this area north of here, right? Most directional traders, meaning I'm trading futures only, it's a rare thing to see them get over 60%. Very rare. Most of them operate in this area right here, 45 to 35% win ratio. But why do they do a very good job? Because they manage their risk very, very well. All right, look at this. This is a Monte Carlo simulation where they did 10,000 trades, random trades, and over a 50-day period. Each column represents consecutive losses. So let's take one as an example and look at it. So let's take a look at the 50. Now this is assuming 50%, right? You win 50%, which is really, for just a pure directional trader, that's very good. You've got over a 75% chance of having 5 losing trades in a row over a 50 trade period, right? Now, depending on the nature of how many trades you do, right? Your frequency of turnover, it may be very quick because you're doing day trades, or it may take you a couple of months because you lay them on and take them off, and you're a little bit more discriminatory. But 75% chance you're going to have 5 losing trades in a row. 50%, you've got a 50% shot of losing 6 in a row. You've got almost a 30% chance of losing 7 trades in a row. So if I were to tell you before you were going to take any trade, hey, listen, you've got to take 7 trades in a row, you've got about a 30% chance of losing 7 in a row. So what about your risk? What would happen if you just let those things go because you just know they're going to work out okay? You have what's called risk of ruin, right? Where you can just totally flatten yourself out. Now, me, right after I got out of the military, man, I was balls to the wall, left-hand lane, left blinker on, top down, hair on fire. You know, you get the story, right? I mean, just hard charging. Thought I was a really smart guy, had my, wired in one can, ready to go. I get into the markets and it beats the living crap out of me. I'm like, what in the hell was that? I lost my money in about a year and a half. That it took me about 6 or 7 years to save. And then I went and then I did it again. And then finally I said, okay, I need someone to help me out. So this chart here, I'm going to bring it up again when we get into risk management. We'll go into more detail, but I just wanted to show you how this thing works. This is a directional trade. This is not options trading. Okay, options trading is we get into the standard deviation moves and fat tail risk and what does it mean and how do you manage your risk? How do you set your trade parameters? How do you set your trade adjustment parameters? I'll go through with you in detail. Okay, now I have said before, this is going to be the same thing I said earlier. The foundational side here, a skillful trader, solid foundation, the things that you need, risk management, that is a solid foundation for you. Strategy, Another solid foundation. Risk management is going to account for about 75% of your success. I mean, and it's probably even underallocated. If you understand risk management very well and you adhere to it, you're going to be a long-term trader. And even if you lose early on, your risk management is going to have you doing smaller position sizing until you start to understand where you're losing and why you're losing until you start winning. And then your equity curve will start going up. And then over a period of time, you will not even remember those 2 or 3 bad losing years in a row that you had before. All right. So risk management is the key to longevity. In any 1 6 month period or 1 year period, you can have a guy make 200%, 300%, 50%, 60%, and they'll end up doing like me. I confuse luck and skill. When I first started, I started with about 60. I didn't have 100, and then I built it up really quick because I thought I was really skillful, and it just happened to be kind of like coming into a very bullish market, and it didn't really matter what I picked and how I traded it. It was just, straight up. So that is probably the hardest thing for a new trader, to start a market where everything is going up like today, and it doesn't matter what you do, you're just going to make money in just stock. You'll set bad habits. Strategy, about 10%. Why do I say that? Well, if you look at the bias is about 15%. So you want to have your bias. If you've got this down, right? Once you've got that down, you can just check that block, and then you don't have to look at it too often. Generally, every month, I'll just review all of my trades, add them up, and look at where is my allocation. I don't look at allocation every week because I just kind of know right now how I should be allocated, but generally every month. And then every quarter, I'll look at the allocations for the quarter. Where does it fit in with my macro strategy for the year? I had said, okay, gold is going to be here. Is it kind of following? Is it changed? If it's changed, why has it changed? Does that mean I need to change some of my strategies if I'm playing a macro trade in gold? Bias, that's where you are right here, right? So why do I say strategy is only 10%? Well, guess what, guys? If you got good risk management and you are bullish and you are right on your bullish play, I don't care what strategy you pick. You can pick any bullish strategy, and the odds favor you're going to win, right? I mean, that's it. It gets pretty simple, but you may not win as much if you don't pick the right strategy. So the proper strategy selection will add alpha to your trade. It'll give you that extra bump, right? Where you have 2 guys trading the same strategy, one guy makes maybe just a little bit more than the other guy because they did you're both bullish, but one did a vertical spread, another did a bull put spread, one did a bear put, or I'm sorry, a bull put, and the other did a bull call. One made a little bit more money than the other, right? So you want to be able to leverage the bias and then the strategy. And then up at the top, you can see this is just kind of my own personal benchmark. Whatever the S&P is, right? I mean, it just gives you a gut check. I want to be 5 to 10% above the S&P. And you're looking at consistency, so over a 5-year period. Now that's the absolute value. So if the S&P is like up 5 or 15% right now, give or take a point or two, you want to be anywhere from 20, to let's say 25%. And if you're in that range, you're doing good. And if you're above that, you're doing really good, right? Now let's say the S&P is down 15%, right? So what you want to do is you want to have the absolute value. So that really should say the absolute value, but I didn't have room to type it in there, to be honest. So you want to do the same thing, right? If the S&P is down 15%, you're not quite in a bear market, but you've got some great trades. Some of the best trades we did in our user group was when we started. I founded our group in September 2008, and that was in the throes of a major move lower. I mean, it's huge. And we had some of the best money that we made in October, November, all the way through February. And then in March, when the market started bouncing in late April, early May, I was standing on the top of the chair and we were going long, long, long. And then we made another killing then too, because all the asset class was just so distressed. So this is kind of my view of the foundations that I hope to leave you guys with. And then I'm going to want feedback on every bit of this stuff so that I feel you guys are getting what you want to get out of this as we go, because the course is going to be so long. Okay. Now, the other thing is this right here, trades selection strategy checklist. This thing right here is just, and it's kind of like, as a pilot, we do everything by checklist, believe it or not. Everything is a checklist. Well, everything in the cockpit, let's say. So we even have a checklist for pre-flight. Where you're walking around the plane. Now, after a while, a seasoned pilot will memorize all of this stuff, but guess what? It still requires a co-pilot to call it out and the pilot to say check, or let me flip the switch to check. So you'll see pilots that fly the same plane 10 years in a row, which means, hundreds of hours every year, and they go through the same check every flight. You got one calling it out, and the other going check or uncheck, right? So this is the area here that I go through when I'm looking at a trade. We will kind of follow this strategy checklist as we go through each of these trades, okay? So this is the kickoff for the Option Masters. Our next session, we're going to kick it off and we're actually going to go into risk management, okay? That session is going to be Thursday, as always, 8 p.m. Eastern Standard. It will be recorded. I hope for those few that either couldn't get in or had issues with their WebEx, because trust me, WebEx sometimes can be a pain in the butt. It's really out of my control, guys. Usually I get about 95% of the people in, and I have a few that have speaker issues, hearing issues, audio issues, video issues. I mean, you name it. And I can't help it. But hopefully we'll work out all the little minor details. So there will be a meeting invite that typically comes out on either Tuesday or Wednesday. If you do not have a meeting invite, by the morning of Thursday, right, then just send me a little note in Skype and I'll post it in Skype for you. Even though you may be in the email list, I don't know, sometimes it just goes off into spam. I mean, who knows what can happen. So again, I want to see those emails from you. Everything that you saw, if there was something on there that you didn't see that you want me to cover, put it down. Now, maybe I'm going to cover it. I just didn't say it on here, but put it on there. And we will go through everything. This is going to be, I'm telling you guys, I hope these video sessions for you will change your perspective in your life on trading. I am not here to tell you, again, follow Brent's way, Carlito's way. I'm here to give you the foundational knowledge to an intermediate level so that then you can take it and then be a lot more experienced in what you need to do to fit your personality. Now, for all of you that are not members of our group, I'd certainly encourage you to come in if you want to come in and join up with our group or in our secret trader. It's whatever you feel that may be cool for you. If not, that's cool as well, right? So either way, it does. I'd like to see you in, but if not, that's cool for me. All right, everybody. I will see you next Thursday, 8 p.m. Eastern Standard Time, November the 16th, and we will go into risk management. So have your pads and your pencils and your papers ready, because this is going to be a good one for you guys. Hopefully, I can cover it in a couple of hours. If I can't, we'll extend it to the following session. Have a great evening, everybody. Welcome in. It's going to be a lot of fun for the next 3 or 4 months. Take care, folks. Ciao.